Wahadan Namaste Adab Sat Sri Akal. This is CS Uncle Kanstia and I welcome each one of you in this amazing session in one of my favorite chapters of SCPM, transfer pricing. Chalo guys, let the game begin. A very important chapter to the students and to the ICAI. It is both their favorites. As far as ICAI is concerned, expect a guaranteed question on this topic basically. And as far as students are concerned, either you know transfer pricing fully or you don't know. As in, you have to do this properly and go. So, in the next whatever 1, 2, 3 hour that I am going to take with you, I will deep dive into this topic properly and ensure that you get full marks if there is a question. And the probability and the chance of a question on transfer pricing is like very high because this is a hardcore, you can say, strategic cost management, performance management chapter. So that is where ICI will include these questions where transfer pricing is there and involved totally. Chalo, on that note, let's start. So we are now discussing transfer pricing. What exactly is transfer pricing? So let me take you through the basics because obviously you are not aware of this at all. Am I right? Yes, sir. Now remember one thing. Every chapter of SCPM has a connection of business in it, right? Somewhere or the other, every chapter is connected to the business that we are doing, be it the chapter 1 introduction to cost management, be it modern business environment, your lean system innovation, all the or maybe chapters like performance measurement and evaluation. Everywhere we will see that the business is a key aspect, and so is going to be the case with transfer pricing. Now ideally transfer pricing is a exclusively uh, practical chapter, but still we will expect MCQs, and ICA has also given good handsome number of MCQs for this chapter. So let's try and get this chapter done and dusted in the best manner possible. Chalo, let's start. So let's get to the basics. Okay, what did I tell you? Every chapter in your SCPM is connected to something called as BUSINESS, business. Because if business is not there, then there is no need to find a cost of a product or even do the marketing. Yes, and at times even marketing is to be done, is taught in this, in one of the chapters that we are going to do ahead. Now we are doing business for a simple purpose. Our logic is very clear. Why do we do business? So I am asking you, you have to tell me, why do we do business? So there's just one motive, and that is apna sapna, money. The more money we will be able to earn through the business, that is what our that is what our end intention is, right? So we are doing business in order to earn net profit. Okay, now my next question to you. What is net profit, guys? What is net profit? Well, simply speaking, net profit is a function of sale and cost. Am I right? So we are doing business. In business, we need to earn net profit. That's what we are doing business for. Okay, now if I ask you, how do you calculate net profit? So you say that, sir, it's a simple thing. We'll keep it simple. I want a layman language here. That's it. What is net profit? Tell you as a layman language. Tell me, sir. It is nothing but selling price minus cost. Yes, this is true. Selling price minus total cost is your net profit. Absolutely. And trust me, this calculation of selling price and calculation of total cost, calculation of selling price, and then calculation of total cost, this is like one of the main objectives. This is like one of the main objectives of a chartered and a cost accountant, right? There are product managers, there are pricing managers, just with the main aim of calculation of selling price and calculation of total cost. So one of the objectives, and if you actually open your intermediate book and find out and write down objectives of a CA or a CWA, you will find to ascertain the total cost of the product, to ascertain the selling price of the product. Okay, I am going to pick up one of them for this chapter, and my focus in this chapter is going to be ascertainment of selling price. Now your immediate reaction will be that, sir, if ascertainment of selling price is one of your motive, then we can go to intermediate level. There also we were taught ascertainment of selling price, or in fact there is a chapter in our book itself, strategic revenue management, strategic profit management. In that strategic revenue management, there is a concept called as calculation of selling price. Sir, we will do it there itself. Well, your answer is correct, but the selling price nowadays is of two types, and in this chapter we are going to understand one of that type of selling price. Sir, two type of selling price, can you please elaborate a little? Definitely. So here we go. The selling price is of two ways. The selling price is of two types. Sir, what are the two types the selling price? Well. One is your external selling price. Sir, the selling price will obviously be external only, because that's where we are going to sell the product. And my answer is the second answer, and that is the real crux of that chapter, which is to calculate the internal selling price. So, one, we have the calculation of external selling price, which is also called as the market price, and the other is calculation of internal selling price. Yes, you heard that right. Sir, how do we sell goods internally? Well, how do we do it and why do we do it is now what I will be explaining it to you. I'm sure your mind is now running towards it. But this calculation of internal selling price is called as transfer price. Is called as transfer price. Now, sir, why will we sell any goods internally? Let's take an example. And the best example that I can bring to you is Amul, the taste of India. Just imagine that you have a factory of Amul. Okay, tell me, what does Amul do? Can I say that, sir, Amul produces milk and sends it everywhere? I'm sure you have heard of Amul, right? So it originated from Gujarat and it sells milk to the outside market. Correct. Now, this is where the real game begins. Amul also has, so this is milk division. Amul, there is a Amul milk division. What does this milk division do? Produce the milk. This Amul also has something called as a curd division, because it also sells curds. Are we understanding? Does Amul also sell curd? Give me an answer, yes or no. Right? So see, here we can see that we have Amul milk also. Can we see the Amul milk? Yes. Can we see the Masti Dahi, which is also called as Amul curd? Right? Both are Amul's flagship products here. Amul is written here in this Masti Dahi, and then Amul is written here in this milk. Yes, sir, absolutely. Now, the whole point of showing this to you is, what do we make the curd from? What do we make the curd from? Can I say curd is made from milk? Hello? Curd is made of milk. The answer is yes. Tell me, where will this curd division take the milk from? Sir, but obvious, the curd division will take the milk from our own milk division. From our own milk division. But obvious, yes or no? Yes, sir. So, when the curd department calls the milk department and tells them, hey, milk department, I need some milk in order to convert it into curd. Milk department will be like, how many milk? Arey, I need 100 tons of milk. So will this 100 tons of milk be sent to curd division free of cost? No, sir. Variable cost? Maybe, sir. Total cost? Don't know, sir. Market price? We'll have to think, sir. And exactly this is why we have this chapter, because when there is a transfer of any product or services from one division of a main entity to another division of another main entity, then the price to be charged by the transferor division to the transferee division, ladies and gentlemen, is called as transfer pricing. Are we understanding? Uh-huh. Got it, guys? So we write here transfer of goods and services. Right? By whom? By whom? By the transferor department to the transferee department. By the transferor department of a company to the transferee department of the same company. It is called as the price at which it is transferred is called as the name of the chapter, transfer price. Am I clear, guys? Yes. So there is a transfer of goods and services. That's not a big deal. But the price to be charged by transferor department to transferee department is called, yes, transfer price is called transfer price. Okay, price to be charged by transferor department, obviously of the same company, to transferee department of the same company, it is called as the transfer price. Clear? Any doubts? So let's make it clear again here. What is a transfer price? What is a transfer price? This is called as a transfer price. So there is a transferor and there is a transferee. Okay, and there is transfer of goods or services, or it could be anything else, right? This price charged between internal transfer, this is the word that I wanted to tell you all, because this was the word that was kind of running behind your head, right? So this internal price basically is your price charged between internal transfer of divisions is called transfer price. Gotcha? Done? Next, let's write down the example so that when we just refer this again, we are able to remember it. Let's write down the examples. First, can I say milk division transferring milk to curd division of Amul? Okay. Curd division transferring curd to buttermilk division of Amul. What is buttermilk made of? Curd. So that will also be internal transfer subject to internal pricing. Chalo, let's take a CA example. We all know the big fours, right? So the big fours have so many departments. Let's take an example of a KPMG. A KPMG statutory audit team, and there is a KPMG income tax department team. So there could be a chances that the KPMG statutory team would require some services from the KPMG income tax team. Is that possible? The answer is yes. So if there is that service transfer also, it is also a, there is going to be a service charge which is going to be levied, called as the transfer price. I hope we are clear with these three examples. And now, what is the word transfer price? We are aware. Now the next question, how do you calculate it? The second part that you may think of, that sir, we can calculate it on cost, we can calculate it on market price. It could be either of the ways. There are many ways to calculate it. How are we going to do it is all a part of the story that is going to follow. Chalo, first quickly let's write down the examples that we have just discussed. Transferor, and then there is transferee. Okay. Then there is Amul. There is Amul. In Amul, there is a milk division which transfers milk to the curd division at a price called as the transfer price. Okay, sir. Got it. Next. Another, just in continuation, we may write down curd division transfer curd to buttermilk division at a price called as the transfer price. And let's take a CA wala example. A KPMG tax division may transfer services to KPMG stat audit division at a price called as the transfer price. Sure. Done. Now the next step that you want to know. So first step that you wanted to know is, what is a transfer price, sir? What is a transfer price? So when internal division transfers happen, the price at which the goods are or services are transferred, and this is a very regular feature, then in that case, whatever charge is being taken by the transfer division from the transferee division is, ladies and gentlemen, called as the transfer price. Are we aware of this now? Clear? Are we clear with this thing? The answer is yes. Now let's go to the next level of the concept. Now, before I go to directly the concept of what, how the transfer price is calculated, I will want you to take a bit backward towards the history of transfer pricing. Are you okay with that? Are you comfortable? The answer is yes, because you should know where all of this is originating. Current transfers are based on market price, but it is not always, it has not always been the case. Previously, it used to be on cost, then it is now on transfer, it is based on market price. Why was previously it on cost, now why is it on market price? Today also there are few firms where the transfer is still on cost. Why? You will come to know once I tell you the history. And today also the transfers are on market price. Why? In what cases is what now we are going to discuss. So you should know the why of what we are doing this chapter, and in order to understand the why, a little backward is what we will have to go. I will tell you the history. I'll not take much time. I know your time is very much important, but a base setting. Let us little dig deep into the roots, get our concepts very clear so that we don't have to bother anything as regards concept is concerned. Chalo, let's start, guys. History of transfer pricing. History of TP. Now, before 1995, the transfer pricing was on a different level altogether. After 1995, the chapter transfer pricing was introduced in the scenario throughout the world, and that's where it has taken more traction. Why so? Why is it that before 1995 there was, at least in India, I can say, there was no transfer pricing at all? So that, let's divide it. One we will call it as the pre 1995 era, and the other we will call as the post 1995 era. Okay, now as far as the pre 1995 era is concerned, there the organizational structure used to be a centralized organization structure. So now, because we have done performance management, we know that there are two types of organizational structures. One is a centralized organization structure. What is a centralized organization structure? Where the decision is taken only by the top management, where there is not much expansion which has taken place. So there is just one main owner who is there, and that owner manages everything, kind of a thing. So when that was the scenario, at that point in time, there was no concept of transfer price, and all the goods by default were transferred at cost from one division to the other. So there was no need of a chartered accountant to get into the nitty-gritties of the working of transfer price at all. But what changed after 1995? After 1995, the delegation started. The businesses started expanding. Businesses realized that it is not going to be possible that we are going to expand without delegation of authority and responsibility. So people started delegating their work. And once delegation happened, the centralized organization converted itself into a decentralized organization. Now, in a decentralized organization, there are various divisions. There are various divisions, and all those divisions are responsible for their own profitability. So again, once there is decentralization, there are different divisions and departments. These divisions, take care of this, please listen this properly. These divisions are responsible for their own profitability. Hence, these divisions are called as profit centers. I had given you all an example of Ambani's. So there is a Mukesh Ambani. He has decentralized his business. He has given Reliance Jio to Akash Ambani. He has given Reliance Industries Limited to Anant Ambani. He has given Reliance Retail Ventures to Isha Ambani. Are we clear, everyone? Same way, say for example, Tata's. There is a Tata Motors division. There is a Tata Steel. There is a Tata Power. There is a TCS. All are different divisions of the main head company, Tata Sons. Now, if Tata Motors requires Tata Steel, at what price should Tata Steel transfer to Tata Motors? Now, logically, if you see that every division is responsible for its own profit, every division wants that my division's profit should be high, because nowadays the you know divisions are given bonus based on profit. We have already done the concept of return on investment. Do you remember, in return on investment concept, what did we learn? That if there is a benchmark, say 12%, beyond 12%, if any division is earning, it will get special bonus. So here also, if there is a you know any division is there, that division needs a particular amount of profitability, return on investment of that particular division. So when the transfer takes place, it will not happen at cost, because if it is happening at cost to cost, then in that case that division is not earning any profit, which will lower down its overall return on investment. And that is where the whole concept of transfer pricing was introduced, which told that let's keep a price between the divisions in such a way that both divisions have a win-win situation, because the transferor is also a profit center division. The transferee is also a profit center division, and both of them want to increase their ROI, both of them want to increase their profitability. But guys, how is that going to happen? So for that, we need a pricing methodology which is beneficial to both the transferor and transferee, and that's where the role of chartered accountant was introduced, because now calculating transfer pricing is very important, as both divisions want maximum profits from the purchase or the sale. And how do you calculate that interim price or transfer price, which makes a win-win situation for both of them, is now what we are going to understand. But previously that was not the scenario, because the internal divisions were not at all concerned with any profitability of their internal divisions, because everything was centrally controlled. Your salary or bonus was not dependent on your division's ROI. Are you understanding or not? So guys, are we going to take it forward now? Yes, sure. So in short, first, so I was just giving you a brief. We'll just dictate that also, because when you are revising, you should know all of that. So let's start. Previously, before 1995, it was more of a centralized organization structure. So centralized system of organization. Okay, so because of that, what happened? Decision making was at the top authority. So as a result of this, the decision making only with the top authority, only with the top authority. And therefore, in pre 1995 era, internal transfers used to happen, but they were at cost, and hence no chartered accountant required. So internal transfer was at cost only. So limited scope of CA. But now, with the post 1995 era, can I say decentralization, departmentalization has happened? As a result, the new divisions, the departments are the profit centers. And these profit centers are responsible for the profit of their divisions, because they are going to get a bonus, a variable incentive. And so the transferor division wants to transfer the goods and services at the highest possible price. The transferee division wants to purchase at the lowest possible price. Yes, that negotiation, that made, that whole thing is what now we are going to discuss, where transfer price is going to play such an important role. So post 1995, there is going to be a decentralized slash departmental setup, right? What, how does thing change here? Because now in a decentralized departmentalized setup, the divisions are profit centric, the divisions are profit centric. So again, there are centralized systems, salary is fixed, your salary is fixed in nature. Fixed salary, salary is equal to fixed salary. So if the salary is fixed, doesn't matter at all for them that, you know, yeah. So all of this is very cost centric. Now if my salary is fixed, doesn't matter to me at whatever price the goods and services are being transferred. But things changed when post 95, when the decentralization was started. So After decentralization, things changed. And what happened? Profit centric system started. So there were profit centers. Let's call this as a profit center, right? And in case of profit centers, the divisions get bonus plus, sorry, salary plus bonus. And this bonus is based on ROI, return on investment. So in order to gain a higher return, I will not transfer anything at cost. I will transfer everything at the maximum transfer price possible. Got it? So now suppose here, if we are in a 2025 era, so here in today's scenario, in today's current scenario, in today's current today's current scenario, what is going to happen? We will see which or type of organization is it. Is it a centralized organization or is it a decentralized profit centric organization? The moment it is profit central organization, we know that role of a chartered accountant is going to be there, and internal transfer is not going to be at cost, it will be at a transfer price. It's a different matter that transfer in such cases may be at cost also in some situations. So that transfer price becomes at cost. But basically the concept of transfer pricing will be used, meaning internal transfers will be at a price which is a selling price acceptable to both divisions and at the same time calculated by a chartered accountant. So suppose if there are two firms, A Limited, B Limited. If the A Limited is having a centralized structure as such, then we will say that internal transfer, internal transfer will be at cost. Maybe no concept of transfer price. But B Limited, majority of organizations today are like B Limited, which are centralized, which are in a decentralized organization where there is profit center divisions, responsibility centers. The internal transfer will always be at cost. At cost. And whenever, sorry, internal transfer will be at transfer price. And whenever internal transfer is at transfer price, you need a chartered accountant. Done. Are we clear with this whole concept so far? Because now we are going to start with the real transfer pricing. So in a short, suppose if I have a suppose if there is a centralized organization structure at Amul, we will continue with our example of Amul. Okay, guys. So suppose if there is a centralized organization structure at Amul, then what will happen? Centralized structure at Amul. Then in that case, what will happen? Suppose there is a milk division, will transfer to curd division, will transfer to buttermilk division. Okay. Now, what is the production capacity? Tell me. So the production capacity is 1 lakh liters. Let's take an example. Now, curd department gives me a call. Curd department gives me a call and tells me, hey, milk department, I need 20,000 liters of milk. Okay. So, milk department is transferring to curd department. What? 20,000 liters of milk. But because it is a centralized organization, transfer is at cost, full stop. The milk department is not at all motivated to transfer it is at anything above cost, because he's like, how does it bother me? I don't care. That's the attitude. And when the curd department transfers to buttermilk department, hello, when the curd department transfers to buttermilk department, and suppose 10,000 liters of curd is required, again the transfer is at cost, and you don't need a chartered accountant. But now let's change the system. Let's change our example. Let's change the system. Let's change our example to a decentralized profit centric approach, to a decentralized organization. In today's scenario, let me tell you, all organizations are decentralized and all are based on profit centers, because everybody wants to expand, everybody wants to be competitive as such. Right now, if this happens, then there are going to be three scenarios. Those three scenarios now I am going to explain it to you. Full everything, each and every single word will be logically clear to you, because first I will give you an example. From that example we will connect to the concepts, and everything will be set in your head. And once you are clear with that, nobody can touch you as far as this chapter is concerned, and I'm sure this will become one of your favorite chapters as well. Chalo, so on that note, let us start, guys, with our first case. So there are, as I told you, three cases which we are going to tackle. So whenever there is going to be a profit center, we will apply the concept of TP. TP is transfer pricing, and in such scenarios there will be only three cases, no other case possible at all whatsoever. First case is called as full spare capacity. First case is called as full spare capacity. Second case, full spare capacity for idle capacity. Second case, part spare, part idle capacity. And the third case, fully occupied capacity. Fully occupied capacity. So these are the three concepts that we should know, that we should apply. And if these things are done, then you can say your transfer pricing is done. Chalo, let's start. First case, case 1. What is the case 1? Yes, it is full spare capacity. It is full spare capacity. Can I write the word spare as idle also? Full idle capacity. Okay, sure. Now we have, as usual, two divisions. One is the transferer, one is the transferee. In Amul, milk is called as the transferer division. Curd is called as the transferee division. I hope we are clear with this bifurcation. Now let's start with our example. So first is the Amul milk division. Amul milk division, which is nothing but my transferer division. Okay sir. And the other is the Amul curd division, which is nothing but my transferee division. Okay, sure. So now I am going to start with the example. The example will be very crystal clear to you once it is done. But for that, I need your full focus. Look into my eyes. 100% focus is what I want from you all. If you are able to give that, I assure you, you will become a champion of this particular concept and chapter. Okay. So thinking anything else? Anybody else? No. Only me, myself. Let's start. Just keep on following my example and you will follow the concept as well. Okay. So now the transfer division, which is the Amul milk division, has a production capacity of 1 lakh liters of milk. So here we have production capacity 1 lakh liters of milk. Okay. Okay, sir. It will be better if you also keep on writing with me. And when I explain the concept, just focus. I'll tell you. Next, for this production capacity of 1 lakh, the Amul milk division has a demand of the Amul milk division has a external demand, or what you call as the market demand, of 80,000 liters of, so market demand, what we call as the external demand, what we call as the external demand, the market demand. How much is the market demand? It is 80,000 liters. Okay, sir, done. Please, can you tell me, looking at the question, how much is the spare capacity of this milk division? Do you understand what is a spare capacity? Spare capacity means the total production capacity is 1 lakh, but our market demand is 80,000. So we will be producing only up to 80,000 units because that's what we will be able to sell. So that leaves us with a spare capacity or idle capacity of, correct, 20,000 liters. So we will write here spare slash idle capacity 20,000 liters. So done. Okay. Now, how did we get this 20,000? So we will write here, we had a capacity of 1 lakh liters, of which 80,000 liters are to be sold in the market. Now this is the scenario, and the Amul curd division gives a call to the milk division. Amul curd division calls milk division and calls and tells, hey milk division, I need 20,000 liters of milk for making curd in my division. So what is the ask of the curd division? They need 20,000 liters of milk. They need 20,000 liters of milk. Fair enough? Done? Done. Now, both of them, milk division and the curd division, both are profit centric divisions. Both are profit centric divisions. By default, the concept of transfer pricing will apply only when they are profit centric divisions. Now you tell me, as a chartered accountant, now we have to decide, as a chartered accountant, we have to decide what should be its minimum transfer price and what should be its maximum transfer price. Gotcha? Shall we start? Sure. So let's start on that note. What will we keep the minimum and maximum transfer price logically? Okay, logically we have to find that. Okay, one more additional information that I should give you is, let me try to fit in here. Let me try to fit in here that I'll be able to fit in here. Okay. Additional information. That's a very important additional information is what I am going to give you. Very, very important additional information. Okay. And that additional information is that the market price of milk is rupees 100 per liter, and the cost of milk, uh, we'll say this variable cost of milk is rupees 80 per liter. This is a additional information. Let's highlight this. Okay, this is the total information that is available to you. Now you are called as a chartered accountant to decide what should be the minimum transfer price and maximum transfer price. Come on, chartered, let's get started. So we are the chartered accountant of this Amul company, and we will calculate the transfer price. So we have to, what is our role? To calculate range of transfer price for internal transfer. For internal transfer. Okay, sure. Let's start. So see, your role as chartered accountant is always to calculate the range. So when you have to calculate a range, what is going to be the range? What should be the minimum transfer price that has to be recovered, and what is the maximum transfer price that can be charged? That basically is called as a range, and that's what we are going to calculate. First thing that we need to calculate is the minimum transfer price. And just to give you a context, minimum transfer price means the minimum amount that we will recover from the transferee division. That is called as the minimum transfer price. So if you want, I can dictate this to you. Minimum transfer price is the minimum recovery to be done by transferor division from transferee division, such that there is no loss to transferor division. Minimum that much has to be recovered. Okay, and then what will be the maximum transfer price? Then max transfer price means maximum. It is the maximum recovery from transferor to transferee. Usually, minimum transfer price is from the angle of transferor, and maximum transfer price is from the angle of transferee. How does this apply? I'll tell you, don't worry. Usually, minimum transfer price is from transferor angle, and maximum transfer price is from transferee angle. All right. Chalo. Now, with this context in mind, let's try and calculate the minimum transfer price. Tell me, what is the minimum transfer price that, come what may, milk division will recover from the curd division? Can I say the recovery of the variable cost, irrespective whether it is selling to curd division or to anywhere in the world? 80 rupees is going to be the cost that is going to be incurred by the milk division, which is the minimum that it has to recover from the curd division. That becomes your minimum transfer price from the angle of transferer. What? So, minimum transfer price is what? It will be recovery of that variable cost. Recovery of variable cost. Am I right, everybody? Right? Done? Done? So, see, 1 lakh is the production capacity. 80,000 is the external demand. For the additional 20,000, which are any which case spare, even if it is to be transferred to the curd division, milk division will specifically will have to produce 20,000 liters, and that 20,000 liters will be produced at a minimum cost of 80 rupees. That has to be recorded. That becomes my minimum transfer price in this case. Any doubts, any questions? No, sir. Done. Got it. So TP, I'll write down TP, transfer price, is equal to variable cost, is equal to rupees 80 per. Done, sir. Now, what should be the maximum transfer price? This is going to be interesting. What could be the maximum transfer price that can be charged? Tell me. Can I say the transferee will not give anything beyond 100 rupees, or even transferer will not charge anything beyond 100 rupees? So the transferee will say, okay, maximum I am ready to pay 100 rupees to you. Maximum I am ready to pay 100 rupees to you. So maximum transfer price, very easy, will be the market price. Will you charge more than the market price? Obviously not. Max, max, how much you will charge? 100 rupees. Wow, sir, this is so easy. Exactly. Who said it is difficult? So the max transfer price, ladies and gentlemen, will be, so we will write max transfer price will be what? It will be market price, which is rupees 100. So transfer price is equal to market price is equal to 100 per unit or per liter, as was the case in our scenario. Clear? Now what is the learning? What is the learning from this, or what is the learnings from the case 1? What concept did we understand? That when there is full spare slash idle capacity, we can have two prices. One, minimum transfer price, which will be recovery of variable cost here, but obvious, this is the minimum that we are going to charge. This is the minimum that we are going to charge. This will be rupees 80 per liter. And the second is going to be the max transfer price. Tell me how much will that be? That will be, maximum will be market price, which will be rupees 100 per liter. All is well, all is well. Clear till here? Done. Now the level will increase, and that's what we also want. We are not afraid of the level increasing, sir. Chalo. So let's come to case 2. Let's come to case 2. What is going to be the case 2? Case 2 is going to be, see this, part occupied, part spare. Part spare, part idle capacity. No. Part spare, part occupied capacity. Okay. Chalo, let's write up. Part spare, part occupied capacity. Done? Sure. Let's start. Again, example will be Amul, the taste of India. Milk division, curd division. Let's start. Here we write the milk division with a small twist now, which is going to come. Milk division. Production capacity 1 lakh, 1 lakh liters. Now here the external demand changes to 90,000 liters. So here we will write down external demand 90,000 liters. Now immediately the mind should tell you what, how much is the spare capacity, or what we call as the idle capacity, guys. How much is the spare capacity? Can I say 10,000 units here as such? Write it down. Spare capacity 10,000 liters. Just information. Okay, as usual, selling price per liter is still rupees 100. Variable cost per liter is still rupees 80. And now we come to the curd division. Now, what about the curd division? Can I say curd division again calls us the milk division and tells we need an internal demand of 20,000 liters. 20,000 liters. See, now why this is called as part spare, part occupied? Because curd division needs 20,000 liters. Of that, milk division will say 10,000 I have idle or spare. But the remaining 10,000 liters, is what I will have to give you from my occupied capacity. I can give it to you, but that is what I am going to give you from my occupied capacity. I will have to sacrifice my external demand and give it to you. Are you understanding, guys? Now, as usual, the first thing that we are going to do is calculation of minimum transfer price. First thing that we are going to do is calculation of minimum transfer price. Chalo, let's start. Now here, what is my internal demand? Tell me, what is my internal demand? Can I say it is 20,000 liters? Yes, sir. Okay. How much spare capacity do I have? 20,000 liters is my internal demand. Okay. How much spare capacity do I have? Out of the 20,000 liters, I have a spares slash idle capacity of 10,000 liters, and I have a external demand of 10,000 liters. Now, if my internal department needs this 10,000 liters, I will have to sacrifice the external demand, sacrifice the external demand, right? The this 10,000 is spare, so here I don't have to sacrifice anything, but that 10,000 I will have to sacrifice the external demand, correct? Now that is where the concept of transfer pricing again will come. For this 10,000 liters, how much minimum should I charge? Can I say I will charge at least the variable cost, because that is the cost that I am going to incur? So here for this 10,000 liters, I will charge a variable cost of rupees 80 per liter. A variable cost of rupees 80 per liter. But for sure I will charge this much. Yes or no? Yes, sir. So can I say here rupees 8 lakh for this 10,000 liters? Correct. But what about this 10,000 liters which I am going to sacrifice? So now I will tell the curd division. I am the milk division, you are the curd division. I will tell you, hello curd division, this 10,000 liters which is spare. It's idle. So I can give that to you at 80 rupees, which is my variable cost. Fair enough. But the additional 10,000 liters, I will have to sacrifice my market demand. And see, I am a profit center. If I am sacrificing my market demand, I expect you to pay me the same amount which otherwise I would have got from the market. So please, for this 10,000 liters, give me the market price that is available in the market. I am ready to give you those additional 10,000 liters also, but I should not lose anything. See, eventually I am a profit center. As a profit center, I have to take care of the ROI of my division, because all my employees are also there. They are also, expecting a bonus. So for the 10,000 liters which are spare, fair, I'll give you at variable cost. But you also understand, no? For the external demand, please give me my market price. I am happy to give that to you. Even the internal team, which is the curd division, will be like fair point, no, that okay, yeah, that is the sacrifice that you are doing. So for that we will pay you the market price. So for the sacrifice of the external demand, I am ready to pay you the market price or the selling price, which is rupees 100 per liter, which is rupees 10 lakhs, which is rupees 10 lakhs. And therefore my minimum transfer price will be, rupees 18 lakh for 20,000 liters, and that will work out to rupees 90 per liter. That will work out to rupees 90 per liter. Hey, something to do, everybody. Are you understanding, guys? Please confirm. Gotcha. Yes. Sure. Cool. 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 Logical. Fair. So. Again, here, what will be the minimum transfer price? What is the logic now? So, minimum transfer price in case of a part spare, part spare, part occupied, what will be the minimum transfer price? We will say that for the spare part, for the spare units at the rate variable cost per unit, plus for the occupied units at the rate market price per unit, the whole divide by total number of units to be transferred, and that is my average transfer price. Hey, Sanjay, what's up, everybody? Guys, are we clear? Important concept. I hope we are done. Now, what about the maximum transfer price? Maximum transfer price is relatively easy, no? Here, what will be the maximum transfer price? Again, he will say that maximum that I am ready to pay you is the market price. And see, even in this minimum transfer price, the final transfer price works out to 90 per liter, which is still okay for the curd division. If this same curd division goes outside and purchases, then it will be 100 rupees. Here, at least it is giving at 90, getting at 90 per liter. So that is still okay. That is still better, yeah. Right? So overall, we will say that this is the minimum transfer price. For the spare unit, we'll pay variable cost. For the occupied units, market price. Total divided by the total number of units internally transferred, we'll get the average transfer price, which is the minimum transfer price. For the maximum transfer price, we will say that transfer price again is equal to your market price. is equal to your market price, or what we call as the selling price, which is correct, which is as a matter of fact rupees 100 per liter. Any doubts, anybody? No, we're done. Now we come to case 3. So what is the learning? Can I say minimum transfer price? This is the learning. We will say this is the learning, right? Minimum transfer price, this is the learning. Maximum transfer price, this is the learning for case 2. Now starts case 3. Now no prizes for guessing what is going to be part of case 3. Correct? Can I say it is fully occupied or zero spare? Fully spare is done. Part occupied, part spare is done. Correct. Now it is going to be fully occupied, or what we call as the zero spare. Let's start. Same to same thing with an example. We have the milk division. We have the curd division. For the milk division, we have a production capacity 1 lakh liters. External demand. Now this is going to become interesting. Any guesses what is going to be the external demand? Full 1 lakh liters is the external demand. Okay. Now same. So now as soon as we see the external demand, we realize that there is spare capacity. How much? How much is the spare capacity? Zero. Same selling price, which is the market price, is rupees 100. Variable cost is rupees 80. Curd. Let's see what is the curd division. So curd division internal demand is 20,000 liters. Done. So now we will start. What we have to calculate? We have to calculate the range of transfer price. I am sure now you yourself are smart enough to calculate what is going to be the range. So here now my range is going to be minimum transfer price, maximum transfer price. Can I say now everything is to be given from my external demand? Full sacrifice is from external demand. Whenever sacrifice is from external demand, sacrifice the external demand. Whenever sacrifice is from external demand, the transfer price is going to be the market price. So here we will say, since the transferor division is fully occupied, the transfer to internal division is totally going to be, the transfer is totally going to be out of occupied units. That is full sacrifice, right? And in case of full sacrifice, and in case of sacrifice the transfer will be at market price. Correct? So I think pretty much easier for us. So the range will be minimum transfer price at the rate market price, maximum transfer price at the rate market price. By default maximum, to how much we are going to charge? By default we are going to charge the market price only, but obvious. So that's going to be the maximum transfer price, which is 100 per liter in both the case, right? So maximum is very much easy. So can I say what is the learning here? What is the learning from case 3? That if it is fully occupied, minimum TP, maximum TP, both at market price. Both at market price. Wow, 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 wow. So are we clear? Any questions, anybody till here? Suppose now, if I tell you there is a company having decentralized profit centers and there is a internal transfer, we will use the concept of transfer price, and it will fall under any of the three cases. Case 1 was fully spare or fully idle. In case of a fully spare or fully idle capacity, what is going to be the range of transfer price? Bolo bolo tell. Tell me, what is going to be the minimum transfer price? Recovery of variable cost. And what is going to be the maximum transfer price? Market price. Yay! This is going to be the range. They will ask you to calculate a range. Done. Okay, what is the second part? Case 2. Guys, any doubts, please let me know, because this is the base setting. If any doubts here, then in that case, we'll have to revisit, understand again. If not, we are good to go. Then comes your second case, which is part spare plus part occupy. Chalo, let's say again, minimum transfer price will be, we will say, the spare units at variable cost per unit, the occupied at market price per unit, total divided by total units to be transferred internally. And the max transfer price? Correct. Max transfer price will be market price. And case 3, no prizes for guessing. Correct. It is, if it is fully occupied, then minimum transfer price, maximum transfer price, both at market price. Hey. Samji Guru, everybody. Any questions, any doubts? Yes, so I think so far, so good. Right now, my mind is saying, let's continue. But my heart knows that we should not, because otherwise it will become too much for you guys. So, tell me, what should we do? So, we'll listen to our heart always. So time for me to say hasta la vista. Next session we will, increase the level more, and trust me, it's going to be a very very fantastic session next. Want to keep it light the first session, because otherwise, don't want you to get too overburdened in the first lecture, and then things may not go as per plan for this chapter. So here we are on a good note. Time for me to say hasta la vista on a positive note, and let's meet in the next session with the advanced level of transfer pricing. Let's begin soon in the next session. Please ensure that you are writing the notes specially for this chapter, because the more you write for this chapter, better it will be, because it will give you a good understanding. On that positive note, with an assumption that you understood everything so far, whatever has been done, take care, keep smiling. Yes, hasta la vista. Bye bye.